right. Well, I'll give us, just about another minute in terms of, just making sure we get everybody here in the chat. But again, welcome. My name is Mariah. I'm Director of Community here at Backflip. Super excited to have you all here. We do webinars twice a month and on a variety of topics. This one I'm super excited about because it's something that is a little bit of a black box, like something that a lot of people don't know a lot about. In fact, I am going to be taking notes as well. As an investor, a small investor myself, I'll be taking notes about the whole application to funding process. But I wanted to give it some ground rules or some expectations. We're going to have this as an open dialogue. So really, this is your opportunity to be able to ask Melissa and Brian, a whole host of questions, and there's nothing that's off the table. So no dumb questions here. Please utilize this time. They have a ton of expertise, and so I really encourage you to either post into the Q&A or into the chat, and we will be answering the questions throughout the session, and then we'll also have a dedicated Q&A at the end. So again, please utilize this time for the best of your ability. This is really focused on folks who are both new to the process and also just a level up. If you've already done this process, there's probably still a lot of questions and things you could be doing just a little bit better. So with that all being said, I'm going to go ahead and share screen and turn it over to my lovely colleagues, Brian and Melissa. So give me just 2 seconds. We'll share this screen and I will hand it over to you two.
Yeah, so I'm super excited to be here today. Thanks everyone for coming. Main focus for today is just taking a deeper dive on how you go through the loan processing and what kind of gets you to that other side there, known as the closing or the funding table. So quick overview of our agenda here. We're just going to introduce ourselves, go through a processing overview, and then I'll hand it over to Brian for an underwriting overview, go over some best practices, and then we do have a Q&A at the end. But again, feel free to write in the chat during the process, or feel free to save it to the end, and we'll be glad to answer your questions.
All right, I am Brian Swaldi. I'm an underwriter. I'm the head underwriter here currently. We have a team of 2 people right now. It's a growing company where we feel like we're expanding every day, and it's just growing by leaps and bounds. I've been working in the industry for 10 years, more than 10 years, about maybe 13 now, doing everything you can imagine, refis, foreclosures. I've been on every side of the underwriting and the title review world. So I really feel like I have a very well-rounded knowledge of the process, and the pitfalls and everything like that. So yeah, that's me. Feel free to ask me anything about my background at Q&A or whenever you feel like.
Perfect. And I'm Melissa Skinner. I'm an end-to-end processor here at Backflip. I have about 4 years of experience. I got into being a loan officer in the height of COVID. So got to dive in there and then quickly transferred over to the processing world, where I've been with Backflip since September. So yep, ask me anything on that side too. And then I think we'll be flipping it to Mariah really quick to do an app demo.
Awesome. Thanks. Yeah, so for those of you who are, OG backflippers, you probably already know about the app. But there actually is a new feature that was just released today that I'm super excited to share about. So if you don't know anything about Backflip, we're a free app that allows you to understand whether a deal is going to be a good investment or not. And so I'm going to actually do a really quick demo and post in the chat as well in terms of the referral link, so that you can follow along and make sure that you have the app downloaded as well. But let me go ahead and share my screen here. So this is going to come right off of my phone. Like I said, it is a free app. We don't pull credit. So once you're ready to go ahead and apply for a loan, I would encourage you to do that so that you can go ahead and see your options in terms of funding. But let's just go ahead and see. All right, Backflip app. Can y'all see that?
Yep.
Cool.
Yep.
All right, so I'm gonna flip myself out of here. So when you're looking at the Backflip app, you'll see there's a couple different things here on the app. The first is the analyze screen. Oh, it just wants to see my face, y'all. You'll see the analyze screen here. You'll also see a couple other widgets. The first one that I'm really excited to show you is around sourcing. So most of our investors talk to us a lot about, how do I find the right deals? What can I do to make sure that I'm like top of mind for wholesalers, all of that. This My Leads that just came out today is the coolest. Essentially what this does is connects your email to the analyzer. And so when you get an email from a wholesaler or a realtor or anyone that you're getting properties from, you can actually just set that up here and it will pull directly into the app. And so it will analyze those deals for you automatically without you having to do anything. You can define your buy box really quickly. And so then once your buy box is defined, essentially you can analyze these deals in a matter of seconds. So all you have to do here is say, connect my leads now, type in an email that you're getting, the emails around deals to, and then you can essentially be analyzing. And we have some folks who've been beta testing this and have been doing it, 65 deals are being analyzed a day. Like you could just do as many as you want. It saves you so much time. So that is My Leads. I'm so excited about it. If you have feedback on it, please let us know. And then otherwise, I just want to show you really quickly how the app works. Essentially, to analyze a property, you'll put in an address. I'm going to put in one that we did just recently in Austin. Let me make sure we put in the right address here. And essentially what this is doing is pulling back all of the relevant comps in the area. And it gives you this estimated as is value up in the top right hand corner. And then it gives you this after repair value. So you can actually see, like, is this deal going to be a good fit for me? Is this deal going to be good for me? And then you can actually view all the comps. You can see where this is pulling from. If you can look into these. You can see, oh, this comp down here is a better comp. You can actually add that and you can see that it changes the ARV in real time. You can always take out some of the comps. So you can really play around with what this number ends up being. And then you can always, change some of these details. For example, if I know that I can do this rehab for 40,000 instead of, 60,000, I can add that in here. It updates everything. And it really just gives you a much clearer picture of whether a deal is going to be a good fit for you. Last but not least, there's a bunch of other features and I encourage you to play around, but last but not least, I would say in terms of where we're at and where, Melissa and Brian will talk about, they're really on the loan side. So when you're ready to go ahead and look at some terms, I would go ahead and submit your application here. You can see it's already pulled all the details from the property. You can go through this in about 3 minutes maybe, and go ahead and get this submitted. Once it's submitted, you'll hear from a Backflip team member within about 2 hours. So from there, you'll then, get to chat with our sales team. And then hopefully, what the end result is that you get to end up working with Melissa and Brian here. So let me go ahead. I'm going to put the referral link in the chat. So if you do not already have the app, then you can go ahead and get that. I'm going to put that right there. Cool. Okay. So with that, let me go ahead and go back into this presentation. It looks like we did have a couple questions around underwriting and things. Do you guys use those comps when you underwrite the deals we are sending you for a loan? Oh, perfect. Great question. Brian, Melissa?
That is a great question. I actually, I know that we get our own valuations done where they perform the comps, they pull the comps from all the local neighborhoods. I personally, I would have to talk to our people on the IT side, whether or not that actually pulls in the same comps. I imagine they would be almost exact, if not exact. I don't know if Mariah, if you've heard if they're the exact comps or if it's similar, but it's basically all the, we're pulling the local similar properties and the purchase prices and stuff like that. So it should include all of them, but I can't say for certain off the top of my head. So I would have to find out for you for sure.
Yeah. Yes. The answer in terms of what I know is yes, we do use those.
Okay.
We use those comps. So
makes sense.
Good to know. Okay, cool. All right, Melissa, I'm
question.
handing it back to you.
Yeah, great question. Thank you. Perfect. So excited to get started here. So we'll start with some processing milestones. That kind of just gives you an overview of what kind of gets you from start to finish. So one of the most important pieces to understand your loans journey is just being familiar with the milestones. So every lender is different. They have their own terms or strategies on how to achieve processing. But these core 4 here are typically a breakdown of the most common steps that are used by lenders. So that's why I picked these here. Once you leave the account executive or the loan officer's hands, you'll kind of want to know what the process is to get you to funding. Understanding that process is important so you know exactly what is being expected of you and when it is being expected. So also allows you to set yourself up for success and get ahead of any pitfalls that may come during processing or underwriting. Since they are technically 2 different things, but they kind of mesh into one. It is important to understand that just submitting your information is not necessarily a milestone, but a step towards a milestone. So your file will start an initial processing, which is typically the milestone that you gather information about you or the company you're using. In this stage, could be where you submit information, some documents, you could go through a credit check and or a background check. So best practice in this step is just to thoroughly read the directions that are being asked and also ask questions yourself if you're curious about why they need something certain or potentially more documentation. So keep in mind that this stage's main focus is collecting and not necessarily dissecting. The dissecting part comes in later, which is in underwriting. Whether you're a seasoned person or just kind of starting out, it's always a best practice to get tasks done as soon as possible to avoid any last minute pitfalls that can come up later or potentially last minute that could affect your closing as well. So once you've submitted everything, the processor has what they need, you'll enter an initial review. So one thing to note in this stage is that it could become a little silent, not to worry, but it could also become a little loud, also not to worry. The outcome is always the same, just to get you to the finish line. So if you find the processor is, asking for a lot of different documents or updates in this particular stage, just keep in mind this is to make final review quicker and more efficient later down the road. So when the underwriter's reviewing, they want to kind of get ahead of that. If there are some things that are pending, they might ask you for additional documentation here. If they're barely hearing anything in this stage, that typically means things are moving along, but it's a great best practice and opportunity for you to ask questions on how it's progressing along the way. So even if you're not really hearing anything, I always say it's a great idea to just kind of chime in and say, how is my timeline looking? Just to make sure things are on track and everything's getting reviewed in a timely manner. So once you've achieved the initial review, that is when it will land in the underwriter's hands for a final review. So this is the stage where the shell's been formed, we're ready to make sure it's solid, and we're ensuring that there's no cracks anywhere. So this is where the underwriter will go through with a fine-tooth comb, trigger any outstanding items, and attention any updates or documents that are needed in addition to what you've already given. So this stage moves much faster than the others. So the quicker you're able to provide additional information, the quicker you're able to review and get that clear to close. And then finally, congratulations, you've received the clear to close and we're ready for the closing table. So what happens in this step is typically all behind the scenes. So you're not hearing much in this step besides that you've made it to the end. So processing is working with title, they're balancing the finances and just ensuring all the documents are prepared and ready to be signed. So best practice in this particular final step is just to ensure that all parties are on the same page, confirming your signing date and location with title, and then ensuring the clear to close from the lender that they have everything they need as well to get you to that point. So now that we have an idea of different milestones, we'll go over some of the pitfalls that you might experience along the way as well. So some pitfalls that can happen at any milestone in processing, it's just important. What main ones could be the cause and how to avoid them. So I just put a few here. Every lender has different parameters for each. So these categories are the most common that I just find come up no matter where you are.
Quick question, Melissa. Sorry, we just had one come up in the chat. Well, there's a couple, but the one that came up around this is how long is the whole processing from 1 to 4 milestones typically?
Yeah, great question. So it does vary by lender. So typically when you find a lender, you'll get the parameters that they have set. For Backflip specifically, we can do anything from 7 days to 14 days. Some lenders require 30 days. So it can kind of be broken up based on your lender. So it's always also a great question with this, because you can always ask the lender up front, being the loan officer or the account executive, what are your timelines as far as close date? So you kind of have a better idea of what you're looking at as far as those milestones.
Awesome. That is fantastic. I also had a question about what's the transaction cost I saw on the deal page. That is cost of part of the loan package that is part of the whole loan process. So I don't know if Brian and Deanna, if you have any other details on that, but part of the loan package.
Yeah, specifically, I mean, we break them down and we itemize them for you on the HUD, and to a lesser extent on the term sheet that you guys will be signing. You'll see that very early on in the process. Some of the fees are an underwriting fee for me, but there's there's other fees wrapped up into it. They're technically standard. 99% of the time they're exactly the same price for everybody. It's kind of a flat rate for some of those transaction fees. Melissa, I mean, you do the HUD magic. So, I mean, I don't know if you have any more insight specifically.
Yeah, so typically your lender controlled costs, you can always kind of ask for that at any time. Like Brian said, every lender is different, but for us specifically, we do charge like a $650 appraisal fee. We have our underwriting fee, loan document fees. Those vary per lender, but you are able to ask those up front, as they do not usually change. They're usually a standard.
Awesome. Thank you both.
All right. So one specific that always comes up is credit. You can always guarantee you'll receive a credit check somewhere in a loan application, no matter where you apply. If you already know your estimated score or potentially have your credit frozen, feel free to share those details ahead of time, just so you can be up to date on what's to come. This just allows any roadblocks to be addressed ahead of time, especially if a credit is frozen and needs to be unfrozen. Sometimes that could take time. So it would avoid any delays in running credit. Another pitfall that comes up is insufficient or untrackable funds. So this doesn't necessarily mean that you have no funds. It just means that it's not as cookie cutter to prove, which, being in a startup space, we completely understand. We're not like a traditional lender who's looking for a specific 30-day bank statement or anything like that. So this always comes up typically in processing, and it's okay, but it's a best practice to be open and honest with this pitfall, just to provide as much information as possible to the processing and underwriting team to ensure it's a pitfall and not so much a hard stop. So one example of this is just if you are part of multiple entities and you use one bank account for all entities, there is a good chance that the processor or underwriter will ask for proof of documentation. So being prepared for this up front would be a great best practice, just for something that could come up down the line. Next here, delaying tasks is also one of the biggest pitfalls in processing, but also one of the biggest to avoid and easiest to avoid. So if you don't have time to gather the information right now, you're maybe pending items from other people, just keep the processor updated so they can understand your timeline and also accommodate you accordingly. So always remember, this is part of processing is completely controlled by you, the borrower. So if you wait until last minute to submit everything, this could cause major delays in other milestones, as it will start to get backed up. So initial review is only achieved by not just having the information, but also reviewing it. So it's important just to always know that in order to get your file reviewed, you'll want to get that information in as soon as you possibly can. Lastly, another major pitfall would be poor communication. Everyone in the world is busy. We totally understand that. If you want a processor to be available for you, just try to make yourself available for them when you can. Nowadays, with text, email, portals, every form of communication, Even if you're unavailable, just feel free to send them a text right in the portal just to keep them updated on the process. Even no update is a good update. So even if you have nothing to give them or nothing to submit to them, just say you're working on it and this is your updated timeline. That way the line of communication is always open and they'll be there for you once you do need them. All right, and then we'll go to the next slide. So while you're going through processing, it is not just us. So who is involved is something that is rarely ever talked about, but so important. It is never just you and the lender that makes the timelines and the dates. It's a bunch of other people that are involved as well that are all behind the scenes typically. So appraisal companies, for instance, are different in every state, county, town, area, everything, this, that, and the other. During COVID, we saw a huge issue with availability and turnaround times, which did cause some long-term changes to appraisal availability in different areas. So it's kind of getting harder and harder to get these things accomplished. So not only does an appraiser or an inspector have to go out and view the property, they also have to then prepare a report. So it is often done in 3 different stages. So there's scheduling, actually going out to the property and setting up a time to do so. There's doing the inspection or the appraisal to actually complete it. And then there's delivering the actual report that they go back and they put all their information together and then it comes to us. So while we can ask for updates on their process, we typically are not given any specific contact information or no specific contact to kind of intervene. So waiting to schedule the appraisal has often become a huge timeline issue just due to reports not being able to be completed. So getting this scheduled as soon as possible just allows ample time to ensure the report comes back and the terms of the loan have not changed due to the report. Secondly, title companies are often the third party who drives the timeline to close. So lenders reach out to title companies for necessary paperwork and documents that you'll need to get to closing. These documents are often reviewed and changed during the process, and their timeline is out of the lender's control. So sometimes they can be unresponsive, they can be delayed, they might have their own questions about our process. This is something that can cause delays frequently and is completely out of a lender's control or a borrower's control. We're mainly driven by a title's timeline. So asking for updates from your processor is a great way to just stay involved and see where you stand with title on your closing timeline as well. Another participant in the process can be real estate agents or sellers of the property. So potential walkthroughs could still be done during this time, or appraisals may have come back different than expected. This is often where these parties could be involved and could change the timeline in processing if there are things such as addendums or potentially appraisal disputes that are changing terms. So it's also important to let your processor know if you do want any of these parties involved or updated throughout the entire process. Sometimes they'll reach out to lenders directly, so it's important to note what information you do not want shared with them. And then lastly, if using one, brokers act as a middleman between lenders and the client. So it's important that if you're using a broker, you're staying in touch and asking how the process is going, should they need any additional information along the way. Brokers often work with a lot of clients at one time, so making time for them to get updates is important just to ensure that your file is moving forward and your stuff is getting submitted on time.
Cool. Melissa, we did have a question come in. It is the appraisal based on the current condition of the property or of the ARV?
Yeah, great question. So currently we do both. If you have both on your term sheet, as for those that don't know, AIV is as is value, ARV is after repair value. So the appraisals that we order, most of them come with both, which is why we ask specifically for a rehab budget that allows you to break down everything in the project. We give that to the appraiser, so they actually have a breakdown of what you plan to do, so they're able to base their ARV off what your plans are.
Awesome. Cool.
All right, and then we'll go to the next slide here. Just wanted to add in a few questions that you could use. Hopefully this helps out during your next processing, but just some good tidbits that you can use to keep you involved as well. So first was just, where are we at with the title company? This is a great question just to, make sure there's a response there, if the lender's having any issues with that, and just overall see where that timeline stands with them. The second one is, can you share the status of the appraisal? Like I said earlier, we're not given much information about appraisals as far as a contact goes, but we're always allowed to see where the estimated time of arrival is, if it's been ordered. This is especially good to use if there's a third party involved that's doing the appraisal. So sometimes you're not the contact for the appraisal, someone else is, such as a different investor or the seller as well. So we can always provide those updates so you know how that timeline is coming along as well. The third one here is, what if any additional documents can I provide? I love this question, and it could be used at any time of the milestones, just because it gives the processor a second look into your file. So they're already going through and combing through what they need, but by asking this question, it's kind of triggering them to go back in and see what else they can do for you. Or if anything is missing, you can get ahead of it before they do. And then last one here is just, what is my timeline for final review? This doesn't just have to be particular to final review. This could be for any milestone. For instance, what is my timeline to get into processing? How are we at with initial review? And do we have the clear to close? This is good to ask at any point in your loan process, just so you're up to date on where exactly you stand in the whole processing and underwriting terms. All right, and then now that we've kind of gone through processing, I'm going to hand it over to Backflip's very own underwriter, Brian, to go through what he sees on his end. So Brian, take it away.
Thank you so much, Melissa. First off, I wanted to say, there's a lot of overlap between what underwriters and processors do, but at the same time, there's some differences. So for some of it, I'm nodding my head and I'm agreeing, because it's stuff that I'm also going to talk about. So I apologize if there's any redundancy, but at the same time, I felt like I was in the audience listening. So it's kind of cool to see what the processing team does, the magic that they do that I don't get to do every day. So that was neat. And I feel like it was a little enlightening too. So good job, Melissa. Thank you so much. First off, you're hearing the word best practices a lot. The one best practice that I just want to throw at you guys right off the top is, you guys are here. You guys are doing the extra work. You're putting the extra time in. You guys are attending, webinars. That's one of the best practices. Always be trying to hone your craft. I'm truly impressed that you guys are doing this and spending this time with us. So thank you very much right off the top. That's fantastic. Secondly, I just want to, my purpose here is to give you guys a little bit of a behind the scenes, kind of pull the curtains back. This is the stuff that happens when you guys are, you apply for the loan, and you guys are, worrying about getting a contractor and how you guys are going to, do the whole deal. And we're the ones in the dark, crunching the numbers, counting the beans and stuff. So we have on this side of the ball here, we have a high tolerance for boredom. So it's kind of a prerequisite to really dig in. I'm the fine tooth comb, as she mentioned. So we really actually enjoy this stuff. We enjoy really checking and looking for things and finding errors and stuff, and correcting errors. That's the most important part. So what I'm going to do here is I'm going to kind of do a little off the cuff. I have minimal notes, but feel free to chime in and ask me questions at any time. So my first slide here is, what is underwriting anyway? If you hear me use the term UW, I shorten everything. So, feel free to ask me what I'm talking about. It's the process by which an individual or an institution takes on financial risk for a fee. So when I mentioned that there was an underwriter fee, that's actually part and parcel, going back to maritime trade. The concept of, you pay a fee for someone to assume risk for you. So that's technically my job. Let me move this here so I can see my notes. Underwriter is a party, such as an insurer, that assumes risk in exchange for an insurance premium or other consideration. And the picture there's actually kind of relevant to what I'm going to talk about. You see the guy with a little hand there signing at the bottom. Hang on 1 second. I need to minimize my screen here to get at my notes. 1 sec. I'm so sorry. Basically, in the old days, back when, we were trading spices, basically, before America was even a country, merchants, they would pool their resources in order to collectively spread the risk of losing their goods. Because a lot of stuff could happen on the high seas, pirates, shipwrecks, stuff like that. And each merchant would agree. They would share the risk, and they would sign at the bottom of the ship's log. It was called bottomry. It laid the groundwork for modern underwriting. Basically, they would underwrite the ship's log and sign their name, basically attesting that, we will assume the risk. And that's where we get that from. It comes all the way back from the high seas and, protecting your investments. So that's what we're doing that's what we're doing when we're doing underwriting. We're protecting your investments. We are making sure that, the risk is low. It is within bounds. I kind of call it the sniff test, as I'm going through. If things pass the sniff test, if they don't pass the sniff test, basically kind of goes off of my senses and experience, and whether or not we need, especially for borderline issues, if we need to reach out. So behind the curtain, I'm going to run you through kind of each stage of what I go through. So like I said, fine tooth comb, it's a little specific, but when we get your paperwork, a lot of the things that we're going to be looking at now, some people think of underwriters as the people that are going to be hounding you for your papers, but really what we're doing is we're trying to make sure that, that you guys have what you need to have a smooth close. So, I mean, that's the most important thing. And I want this time to be something that you guys can see as calming and reassuring, so that that we are actually doing our due diligence to make sure that we're getting you from handoff to closing in a smooth and quick manner. Easier my job is, easier your experience is going to be. So one of the things we collect, as Melissa said, is paperwork proving income and assets. That's really important that we have that. Some of the things that I'm going to say is that are tips. Make sure that we can tie it to you. That's one of the bigger things that I see happen, is we can't tie the assets to either the individual or the entity that you guys are closing it. It might have another entity name, or it might be somebody that you work, that you're tied to, maybe somebody else in your entity. We need to be able to specifically tie it to you, and we need it to be at least, we need your assets, your liquidity, as we call it, to be at least the amount of the cash to close, whatever that is. And unless it's a refinances typically don't have cash to close. So but we just need to know that you have as much as your cash to close, plus enough. We try to look for enough to cover 3 interest payments. So ideally there would be a couple thousand more than the cash to close. So that's a big thing. And even if you guys are doing a refi, we still need to know that you guys have a bank account. So it's basically just sending us proof of a bank account, so that everything can move smoothly. So entity docs, that's something that I got started here on about 6-7 months ago when I started. Basically, it's very important. There could be a lot of pitfalls to that. Some of the documents that we look for are operating agreements, OAs. You guys that have entities will know what I'm talking about. If some of you guys are thinking about getting started on this and thinking about getting an entity, this is the perfect time for you guys to take notes on it, because it's important. I got my own entity recently, and it's a big undertaking. So, but it's at the same time, it's very important that you just understand the simple terms. You need your federal EIN, not your state EIN. What EIN stands for, Entity Identification Number. That is basically like your social security number for your entity, for your company, your corporation, your LLC. We need your articles of incorporation, most important. That is the place where your company name is official. If you think it's one thing, but it's on the articles as something else, it's what the articles say, because that is what is filed with the state. The state, what the state says your name is, that's your name. I've seen some discrepancies where borrowers will think that there's someone else, but there's, maybe it was an error in filing at the state's fault, but what the state has is what is important. So make sure you guys are checking that and using that name. And if there is an error, make sure you're getting it refiled. Very important. And certificates of good standing. Sometimes we will pull these for you guys, but at the same time, you guys can pull this from the Secretary of State websites in your individual states. Sometimes they're free. Sometimes they cost $10-20, depending on your state. So that basically just lets us know that, you're an active company, your taxes are paid up. that you're in good standing with the state, that it's not a defunct LLC or a corporation. So yeah, so if you guys want to go ahead and pull those ahead of time, that can move the process along more quickly, make my job go faster so I can get you guys in and out the door sooner. Homeowners insurance, that's a big one. I'm going to talk about that a little bit later. But that is one of the biggest pitfall ones. It's very important that everything on there is accurate. So that's one you're going to be getting kickbacks a lot on if there are any issues at all. The rehab budget, Melissa touched on that. It's a breakdown of each individual thing. You want to make sure that it's matching what your term sheet says. Whatever you guys agreed upon on your term sheet, that should be what your construction budget is and what each itemized line adds up to. So that's basically it. Make sure your address is on there. That's pretty simple, but it's also a very important task. Let's see, credit and background. We already mentioned that. That can be a big thing. Background is one of the most common things that will hold things up. That's not on you guys, really. That is something that, it's a pet peeve of mine. It's the company that does the background searches that could really drag it out. So, we're usually crossing our fingers the day of closing, hoping the background gets in there. So, but that's one of the things that we'll be pulling for you guys. We'll just check to make sure that you guys have no financial crimes in the last 7 years, or violent crimes. Those are the two big things. Anything after 7 years, it's not an issue. And if there is something that pops for you guys, all we'll be doing is we'll be reaching out to you guys, asking for a simple explanation of what it was. And, since I've been here, I haven't seen anything any deal get lost because of that. So, I mean, don't worry if you guys have something on there. We'll just ask you to send us a typed explanation of what it is. It's not a big deal. Let me see here. So the next thing is property tax and lien priority. This is very important, obviously, when you guys are purchasing these properties. If there are taxes due, they have to be paid. Most of the time we see they're paid through closing, usually by the seller. But that's an important issue. If there are any tax liens, we got to make sure that they're getting taken care of. So if you guys know about those, you could always bring those to our attention ahead of time. But if not, this might just become something that, as I do the review, I'm looking at your tax cert and I'm making sure that, you guys are free and clear. And if not, we're just going to make sure that it gets taken care of in the closing. So that's pretty standard. Lien priority is very important. Taxes are they're one of the few things that will always take priority over your loan. So if they're not paid, basically, it's the order that if there would be a foreclosure, knock on wood, that's the order that each mortgage would get paid off. So taxes, they're numero uno. So that's why you got to make sure that they're free and clear and it's paid by closing. So just to look out for you guys' best interest. Let's see, you can skip to the next page, Mariah. Okay, the PSA is the first thing I look at. I look at it at every stage. So I get very, very familiar with it. It stands for purchase and sale agreement. It's basically, it's written up, signed after a buyer and seller agree on the price and the terms. We need to see how much you paid for it, for the property, how much the property costs at the beginning, because purchase price is going to be basically subtracted from your ARV, your as repaired value, and that's going to determine your spread. And that's a very important concept. I say it at the bottom there, but that is where you guys are making your money. So that's very important. So that ratio is going to be very important. So we need to have an accurate count of that. In cases of refinances, you might not have a purchase and sale agreement. You might just have the HUD from your original purchase. We'll be asking for that. And if you guys are planning on doing a refinance with us, feel free to go ahead and just send that in right away through the portal. That will grease the wheels a little bit. So we just, like I said, or we'll also accept warranty deeds if they have the original purchase price on it. We just need some kind of recorded documentation saying how much you guys bought the property for. So, and I'm not going to go over as is ARV and AIV again, but those are very critical to determining the spread. But the spread is where the money is, guys. So, keep an eye out for the spread when you guys are looking at your deals. Underwriting stages, much like Melissa's stages of processing, some overlap. Handoff, that's when we get, we're getting the term sheet and we're getting your loan kickoff form. That's the form that you guys are going to fill out. I'm sure all you OGs are very familiar with it. We collect that at every single time, even if you've done repeat deals with us, because there's specific information to that deal that we need to collect. Now, if you guys have done a million deals with us, there are some things that we don't quite need every time, but this one is going to be an every time sort of a thing. That gets reviewed with a fine-tooth comb. We find out, who's planning on signing, if you're signing for your entity, or if you're just going to be a guarantor. So that's a very important thing. That's where we also start to look for like any errors and anything missing. So that's my favorite stage, because that's where we catch the problems early, nip it in the bud. The sooner we can get that done, especially if it's only going to be a 7-day closing or something like that, the sooner you guys are closing, the more important it is to be involved in the portal, file invite. I'm going to have a screenshot of it for you guys later so you can see what it looks like in case you've never used it. But that's very important that you're checking, because that's where I'm going to be telling you guys what's missing, or Melissa will be, or or the seller, the AE as they call them. They'll be telling you what you need. So that's very important. Hopefully we can catch them there. Final review. I've always found it interesting that we call it final review because there's one more after it, but it's the time when I go through and I check all the docs, and I'm making sure that the docs are accurate. So everything that you guys have gotten, anything that's still lagging, that's the stage that I'm really gonna, just be asking, maybe every day or every other day, hey, what's the status of this? That's a very important stage. And then if everything goes well, the only thing that would hold up final review is any financial issues, credit. If we're having trouble pulling credit, if your credit's frozen, if for some reason, like we're adding somebody to the deal, that would hold up final review. Bank statements, that's another big one. So you want to make sure you guys get us your bank statements at that point, before that point. But that's when we need it so we can move it to the final stage. Final review usually occurs a couple days before closing, ideally 3-4 days before closing. And then QC review, which is quality control review. That's where Melissa's created the HUD and the loan documents that you guys are going to sign. And it's my job to go through and just, make sure that every single thing is accurate. So, I do a lot of repeating in my life. Everything is like, does this match? Does this match? And just making sure that there's no errors. Because when you guys are signing, and another tip is when you guys are signing your docs, make sure you're reading it. I know it tends to, even myself, when I signed for my mortgage, you kind of gloss over after a while, but especially like the important points, like all the nouns, you want to make sure they're the same, like your name that you're signing over, and the amounts and things like that. Make sure they're accurate, and make sure you're staying on me, making sure I'm doing my job. So that's what we do. I make sure that all the money's right. Post-close, that's something that happens obviously after closing. We have another team that looks at, make sure all the signatures are right. Make sure that, there was nothing missing. On your loan docs, there's going to be more than likely at least one, but depending on the type of documents, there might be multiple places for signatures for your initials. So make sure that you guys hit all the initials and everything like that. It's not a big deal if you guys miss something. We get it taken care of. We get it wrapped up. It's not going to cause a redraw. That's the biggest thing you want to avoid. You want to avoid a redraw, because that will, you guys would have to come back in for signing, and that'll delay the process. And that's our goal. We don't want to delay the process. We want you guys in and out the door as fast as possible. So, I'm looking to give you guys a great experience. So make sure you guys are checking when you're signing. And then in-process reviews, I put that at the end. That's something that, we like to do every day in between. We'll just check up on a file in between the final review and the QC review. We like to touch file 6 to 9 times, ideally. It really depends. At least 6 to 9 times, making sure that everything's copacetic, everything is on track for you guys. So you guys might not see a lot going on. It's like the duck on the water, but his legs are kicking. So we're the legs. So we're making sure that everything's moving along for you guys. So that's the process.
Awesome. Thanks, Brian. We actually had a couple of questions that came in. I figured we
Yes.
can answer live. So what is the minimum on credit history that still works for you?
Yes. The minimum that we go with is 640. Sometimes depending on the deal that you've worked out with the seller ahead of time, it might be 670, but we generally, you would have to add somebody to the deal if it's in the 640 range or below. If you have somebody that, you could have in your entity, or somebody that you could have sign as a guarantor that has a really great credit score, that will help to balance it out. And if you have 3 people sign as a guarantor, they take the middle number. So that's pretty cool. But yeah, 640 is basically what you're looking for.
Cool. And then next question, is the title company involved in the post-close review to ensure accuracy?
Yes. Yes, they are. If there are any issues with anything that was wrong on it, we do actually send it back to get them corrected. Typically, though, we go through that with a really fine-tooth comb to make sure that the title company does not need to handle anything with that. Usually, that's just something that we handle with the closing team, with the notary, making sure that if something's missing, that we get them to sign it. But yeah, title is very much involved.
Awesome. All right. Well, I encourage people to keep doing questions, but I'll turn it back to you.
You guys are asking awesome questions. Thank you so much. You keep me on my toes. Like I said, high tolerance for this stuff. I love it. So this is actually a lot of fun for me. So, keep them coming. Due diligence. I mentioned this before. That is what my job is. I have a family motto, and it says no half measures. I actually have a family sigil from Game of Thrones. It says that on my wall right over here. And that's what I do. I don't take any half measures. Everything is, if you're going to do it right. So review. I review, you guys review. Make sure that you guys are checking your stuff. Just an ounce of prevention goes a long way. There's a lot of redundancy built in here. Like I said, a lot of what Melissa said is what I've done, and you're seeing the redundancy come out in what we're saying. So that's why, because we're making sure that, we want to have our hands under you guys, making sure that nothing's slipping through, nothing's missing, so that you guys don't have to worry about it. We want to see the exact info that you guys provide. It has to be the exact information as it's recorded with the state. That's what I said about the articles. Make sure that if your articles show your entity name has a comma. Commas are important, believe it or not. If it's Brian Swaldi, comma LLC, it's got to have a comma. Your IDs, when you guys are talking to the sellers, make sure that you're telling them your name as it reads on your ID. One of my pet peeves is when it comes through and you have a really great relationship with the sellers because they're awesome guys. I love working with them, but they know you as, if your name's Joseph, they call you Joe. They'll send the term sheet through with Joe. And then it gets all the way to the QC stage. And oh my God, it says Joe. We have to fix everything because it's Joseph on the ID. So make sure that, that you're going by your official name on the ID. Entity names, like I said, even commas, getting ahead of myself there. HOIs, it must be exact. Everything. It's maddening, but there's so many things on your homeowner's insurance, HOI, that can be wrong. So make sure you're checking that your name is correct, your entity name is correct, that the coverage date, we require the coverage date to be 1 year from closing, 1 year from the date of closing, and unless it's a refinance, but that's important. It can't start after the date of closing, and it has to go for 12 months. So that's a big thing that I see get messed up. Make sure that our name has to be on their double backflip. That's one of the things that can get it kicked back. So make sure you guys are checking for everything on there. And the amount of your insurance has to cover the loan amount. Very important. I'll see it come through where it's only like a couple thousand below, but that'll get it sent back. And those are one of the last things that are always holding up. I know that when I check it at QC, that if there's anything red in file invite, that's going to be insurance 9 times out of 10. So make sure you guys are checking it because that'll help you guys get it done faster. You can do more deals, make more money. Let me see, assets. And like I said before, they have to be recent and we have to be able to tie it to you. So make sure that you guys are checking that. Very important. So.
Awesome. Thanks, Brian. There were a couple questions that came through that I wanted to highlight. Melissa's very diligently, answering, but also wanted to highlight. One of the questions was, what is the total time you guys can approve the loan processing, including the underwriting also? And I just have to give huge props to our loan processing team, that from application to close can be, 7 to 14 days. That is a testament to y'all's work and how incredible you are at what you do. So I just wanted to highlight that. And then there's some other questions that I'm sure both of you can answer. The first is, if I'm using a 401k loan to fund my deal, should I take out the loan now or after closing?
That's an excellent question. And it's actually very timely that you asked that. Just today, we had a processing team meeting, and that's policy that we recently set. We actually don't like to use 401k retirement funds as proof of funds. It's if you guys are using that as supplemental, something that you're giving us a bank account that covers cash to close, And you're explaining that, well, my 401k funds, or something like that, or an investment account, you guys are going to be using that to pay your monthly, your monthly fees, your interest payments. That's okay. But yeah, unfortunately, we can't take that as the sole source of income and liquidity. So thank you very much for asking. That's a very good question.
Got you. And so in answering, should I take out the loan now or after closing? That would be post-closing?
That would be post-closing, yes.
Got it. Okay.
Yep.
All right. So how much do you charge for draws, and do you inspect the work being done? Oh, I love this question.
Melissa, that might be more your area than mine.
Yeah, so once you do go to close, we send you an onboarding email from our post-close team that goes over all how you request a draw, how the inspection is done. I believe it's a $250 per draw. I'm not exactly positive on that, but they break down all that information for you, and then there is an inspection that's done each time you're ready to do so.
And we can do those virtually, which I always like to highlight as well. So convenient, like have, yourself or your GC or whoever's on site doing that. Like, wow, very cool. Okay. Veronica asked, which credit score do you use?
Oh, that's a good question. We take the middle score of the three. We typically get 3 credit scores from the 3 major credit companies, Equifax, and of course I'm on the spot, so I'm blanking on the other 2. I see them every day, but we take the middle score. So the high score, we cut the low score, and whatever the middle score is.
Awesome. Next question, is it homeowners or construction insurance? And what if you are using gap funding for closing costs and carrying costs?
Okay, it's typically homeowners insurance. I have seen a very few come through that it was construction, but 99% of the time it's HOI. That is pretty typical. And I'm so sorry, Mariah, could you read the second half of that to me again?
What if you are using gap funding for closing costs and carrying costs?
Gap funding. We do see gap funding come through. We typically do work with that. That's typically not an issue. I have seen gap funding. So yeah, that shouldn't be a problem.
Well, and then it looks like we have some questions in the chat as well. Can we refinance the original loan from Backflip with you again?
Excellent question. I do not know what the policy is, and I'll tell you what I would do if I saw that come through. I would escalate that to my supervisor just to get his papal sanction on that and make sure that it's okay. I'm not totally sure on that. So, I mean, I would definitely suggest asking the seller and see what they say, because that is definitely something that management would have to sign off on. That is not our typical practice, though. So.
Well, all right. I love it. This is so engaged. Let's move on to the next slide, but yeah, keep the questions coming.
Yeah, definitely. Okay. Again, this is going to be kind of a little bit of an overlap from what Melissa showed you guys, but it's very important. I really wanted to make sure I said this to you guys. Common issues that I see leading to delays. I've touched on this a few times already. HOI docs, like I said, 9 times out of 10, there's going to be a problem. So when you guys are getting your homeowners insurance, you're getting your policy, we need to see the policy, and we need to see that there's liability on there. It needs to be a minimum of $500,000, but typically we see $100,000 to $2 million of liability coverage. So that's very important. We also a replacement cost estimator. That's basically where they estimate what it would cost to replace anything in the event of something happening. So, we need to see an RCE, as they call it, replacement cost estimator. We need a receipt or an invoice, basically just proving that, it wasn't just created on, on Microsoft Word or something, just basically showing that you guys, how much you're going to pay for your HOI, and that you're either going to pay it through closing or that you've already paid it. That's very important. That can hold it up too, if you guys forget to do that. We recently changed the portal so that it's a separate request, a separate ask that we give you guys. So it should be a little bit easier for you guys to know what we're asking for there. So, but yeah, that's a big one. The PSA, purchase sale agreement, assignments, addendums, they're inaccurate. We want to make sure that all those things, check those things, guys. Make sure that your entity names are correct. The address is correct, because if the address is even a little bit off, it's like it's not even the right property. So you got to make sure that you guys have the address on there. We may come back to you to let you know how the county assesses, the address, and that's not your fault. No problem. We check that. We cover you guys for that. But we might have to come back and ask you guys to have an addendum made, which is you're changing the terms of the PSA just so that it matches how the county assesses it, because the state, the county, whatever they have on record, that's the source of truth. And assets, make sure they're within 30 days. I already said that, guys. So we can move on from that.
Cool.
Okay, now this, it's rough looking, but it's just a redacted view of file invite. We call it the portal. So this is going to be what you guys use to communicate with us, the messages, sending us the documents. We'll send you guys requests. You see the thumbs up and thumbs down. The thumbs up are kind of grayed out on most of them on the right-hand side there. We take a look at the documents you send, and we'll either give them a thumbs up. Yay, you guys did it. You're done. You don't have anything else to do. Or thumbs down. There's something wrong with it. It turns from green to red, and we'll send you guys a message. It's automatic, basically. Either I or Melissa will type it in there. And we'll just tell you guys what's missing, what was inaccurate, basically just let you guys know what you need to send in. It's amazingly, I haven't had this in any of the other companies I've used, so make use of this, guys. Check on it every day, every other day. It's an amazing tool. It really, really helps the process go smoothly. So I can't say enough about file invite. So definitely, if you guys are newbies, take a look at it and familiarize yourself with it, because it's a great tool.
The awesome joys of working at a tech company.
Yeah,
You get to
exactly.
utilize tech. Yeah.
I'm thrilled, actually. It's amazing. It was compared. It's so smooth here. So, that's why I want you guys to get to see what we do, because it really is. It's a blessing for us to work here. So, best practices. Some of these were already covered, but be attentive. Just be aware that we might be reaching out to you on a day-to-day basis, and as it gets closer to you closing, you guys want to be checking in more frequently on the portal. That'll just give you guys less headaches, and us. So be responsive. If we ask you something, we'd like to hear back like by within 24 hours. The most successful back flippers and flippers in general are the ones that are responsive and engaged. And you guys clearly have shown a propensity for that. So you guys are hearing things you don't need to hear. Be involved. Same thing. Just be open and patient. Sometimes things are out of our hands. And I love that Melissa brought that up, the title company. Sometimes, we love it when title companies get us stuff right away, but sometimes the title company drags it out and then there's not much we can do about it. And some of the things that I want you guys to take with you are be your own underwriter, review. You guys, you want to measure twice and cut once. And, that's relevant to the house flipping community. You don't want to be doing things over and over and over again. Make sure it's right, and then I don't have to bug you. But then you guys also get out the door a lot faster. So that's awesome. And just be wary of the unavoidable errors, or I'm sorry, the avoidable errors. That's the thing that's a pain in the backside. We can't do anything about title coming back to us, but with the title companies, but there's so many errors that are avoidable. Just an ounce of due diligence can go a long way and give you guys a great experience. So, review.
Awesome. Amazing. Wow. Thank you both so much. I will open it up. I know we're right at time, but if there are any last minute questions you can sneak in, I encourage you to do that. I'm going to post a couple things. The first is one of our values is just being able to be as transparent and candid as possible. So I encourage you to reach out, shoot me an email. My email is mariah@dobackflip.com. I can get you connected to these two lovely folks. And then obviously I encourage you to download the Backflip app as well, just to, make sure that you're analyzing properties and getting into your next deal. So, thank you, Brian and Melissa. This has been amazing. Let's just see if there are any final questions that we can answer before we wrap up for the day. Quick one. What is the difference between taking a loan from you guys versus a bank or private lender?
Very good question. Well, the most important thing that I would chime in with is that we have a variety of loans that are actually geared towards a short turn time, for flippers. That's very important. We have a lot of very creative terms, ways that we can, the zero gravity loan where, it's a little more cash to close, but you don't pay any fees till later. So I mean, it's pretty impressive. So that's the biggest deal, is that this is specifically geared towards a short-term time for flipping, and also geared towards you guys making a high return on your investment. You guys would, if you go to a regular bank, yes, you can get a loan, but it's not going to be geared towards your needs and your specific interests and a quick turn time. So
Agreed. And I would lastly just say the tech piece as well, right? So that it makes it as easy as possible, so that you can just be in the field doing, the work that you need to be doing on the ground. So yeah. What is the minimum loan amount that you finance?
Yeah, so I answered this a couple times, but 50,000 would be our minimum loan amount right now.
Awesome. Cool. All right. I know we're a little over, but any last questions or any final thoughts, Brian and Melissa, that you wanted to share?
But thank you guys so much for coming. This has been so fun. I hope we provided at least a little insight into what you see in processing and underwriting. I know we're usually kind of behind closed doors there, and we're always the ones just chatting to you, but really appreciate you even willing to learn kind of what goes on behind the scenes, and making your next process a little bit easier, I hope.
Yes, and I just want to say that you guys always impress me. People that are entrepreneurs, flipping, doing these kinds of things, revitalizing your community. It's very impressive, and I hope to be able to actually do what you guys do someday. So yes, I'm making sure that your loans go through and all that stuff, but like, I'm impressed. I sometimes I am in awe of you guys, and I actually kind of want to do that myself. So just keep doing what you're doing. You guys are actually doing really good work out there, and it makes me proud to come to work every day. So good job, guys.
Awesome. Thank y'all so much. And again, if you want to have another backflip experience, we do these twice a month. So stay updated. We will send the recording of this so you can watch it again for any additional insights. And thank you all so much for being here, Melissa, Brian. Really, really appreciate it. Take
Thanks,
care.
guys. Take
Thanks,
care.
guys. See ya.